Hello everyone, welcome to this episode of the program. First, let's focus on the gold market. The latest spot gold price is quoted at $4,048 per ounce, down 0.70% for the day. Gold briefly broke through $4,100 on Monday before significantly retreating, and is currently testing technical support around $4,045. On the news front, although the situation in the Middle East remains sensitive, both the US and Iran have paused mutual military strikes, causing extreme risk aversion sentiment to cool down, which has diminished gold's upward momentum in the short term. Meanwhile, this week's Federal Reserve meeting will have a significant impact on the market. The rebound in oil prices has once again raised inflation concerns. Although the market expects interest rates to remain unchanged, the likelihood of the Federal Reserve making hawkish statements has increased, leading some funds to choose to take profits and exit before the meeting, further suppressing gold prices. In the foreign exchange market, the dollar continues to fluctuate at a high level against the yen, with the latest quote at 163.7. The yen remains in an extremely weak historical low range. The continued weakness and inability to rebound of the yen are suppressed by three macroeconomic factors. First, as a country highly dependent on energy imports, even though the US and Iran have paused mutual strikes, high international oil prices continue to raise Japan's import costs, worsening its trade conditions and putting ongoing pressure on the yen from a fundamental perspective. Second, the substantial interest rate differential between the US and Japan continues to suppress the yen. The Bank of Japan has been hesitant and slow in its actions regarding interest rate hikes and currency market interventions. After the yen broke below the important threshold of 163 yen, the central bank failed to organize a strong defense, allowing arbitrage funds to continue to boldly short the yen. With the Federal Reserve's decision approaching on Thursday morning, if the Fed maintains its hawkish high interest rate stance, the U.S. Japan interest rate differential will be difficult to narrow, continuing to provide upward support for the dollar against the yen. It is recommended that investors manage their positions carefully and closely monitor the results of the meeting. That concludes this episode of the program. Thank you for watching, and we'll see you next time.